Yo, what's up traders? Welcome to a new video. In this video, I'll be showing you a nice trading strategy, a scalping strategy that you can use scalping gold. And yesterday I already went over this trading strategy more in depth. Today I will briefly go over it. And of course, I will test it 150 times for you. Alright, so yesterday I showed you the strategy. I will briefly go over it. We have basically one indicator. I'm looking for the EMA 20, 50, 100 and 200 by Dr. Sweets. So you click on it once, then over here you click on settings and make sure to check this and this. This is the 50 and this is the 200 exponential moving average. So I use the red color for the 50 and the grayish color for the 200. The strategy is quite simple. By the way, before I forget it, two things I want to mention. First, comment I subscribe so I know exactly who my subscribers are. I'd like to know you guys. And secondly, we will be using the 1 minute time frame, which means that we will be paying relatively more fees. We will be paying spreads and commissions as well. I really recommend you guys to choose a broker that provides low spreads. I can recommend IC Markets. I use them myself as well. If you're interested in them, just check out the link in the description. And I also like Henkel Trade if you are an American. Alright, back to the trading strategy. The 50 exponential moving average needs to cross the 200 exponential moving average. In this case, it happens about here. And if that happens, we only are looking for buy opportunities because the 50 is above the 200. If the 50 is below the 200, then we're only looking for sell opportunities. Over here, the 50 is above the 200, then a candle needs to close below the 50 level. It's hard to see. And then when it closes above the 50, so bullish momentum over here, then we take a buy trade and we place our stop loss below the latest low, which is in this case about here, and we risk 1%, and we would like to gain 1.5%, which means that our risk reward ratio is 1.5 to 1. Let me show you one more example. About here we see that our 50 exponential moving average crosses the 200 to the downside, which means that we're only taking sell orders. The price goes to the upside, it crosses the 50, and then it crosses the 50 again to the downside and closes also below the 50 exponential moving average. As you can see, this candle is a sell candle, a bearish candle. It closes below the 50 and we're only looking for sell opportunities because the 50 level is below the 200. Then we take the trade, we place our stop loss above the above this high over here, and then we're looking for a 1.5 to 1 risk reward ratio trade, and as you can see, it turned out to be a winner. Let's test this trading strategy 150 times. Alright, the results are in. Let me show you the numbers. We traded gold on the 1 minute time frame and we used a risk reward of 1.5 to 1, and we risk 1%, and every 1% that we risk we would like to gain 1.5%. We took in total 150 trades. The winning percentage was about 49%. It took me 24 days. Wins in a row was 6, losses in a row was also 6. And in total the gain on the account was 35%. Especially if you are aware of the fact that we've been trading for 24 days, which is a little bit more than 1 month. 1 month has 20 trading days, and you have gained 35%. But you have to take into account the spreads and the commissions. So make sure that you're using a broker that uses really low spread. I already recommended IC Markets for non-US traders and Henkel Trade for US traders. You can see the link of both brokers down below in the description. So you really have to take into account the spreads. How can we optimize this trading strategy? Well, first of all, I already showed you that we took some losses during Asian session. If you try to avoid that trading session, so you only trade, for example, the London session or the New York session, then you really increase your win rate, and of course you will make more money. So that is something that I would recommend to do. Do not scalp during Asian session. And what I also would like to say is that maybe it's possible to, let's say you are in profit when you're using a 1-to-1 risk reward ratio, and if you have hit the target, then you place your stop loss to break even, so you do not lose the trade anymore. Basically move your stop loss to break even when you reached a specific risk reward ratio. In this case you can use a 1-to-1, and when you've reached that level, you move your stop loss to break even. That means that when the price goes against you, then you do not lose the trade, but you end up at break even. So that is also something that you might consider to do. Alright, if you are a scalper, then this strategy is something that you can consider to use. It's really simple to use the strategy, and the numbers aren't that bad either. I mean, about 30%, especially if you can filter out the bad trades during Asian session. And if you like this video, give it a thumbs up, subscribe, and I see you in the next video. Also, let me know down below in the comments which trading strategy you'd like to see. And don't forget to subscribe, and also comment down below in the comment section that you've subscribed. So I would like to meet you guys. I see you in the next video.